Last night, Elon Musk talked softly, but he carried a big stick. In a call that had very poor audio quality, is really hard to tell what was being said. Elon dropped a ton of bombs, and Tesla also shared with us the progress that they're making in their business. What we saw was a big increase in their profits, a drop in their costs, and acceleration in the margins on their energy business. They also shared several tidbits about autonomy that should get Tesla bulls pretty excited, and excited did they get. In this video, I'm going to share with you my quick thoughts about the Tesla earnings release and the earnings call. And I'm Bradford Ferguson. I have over 5,000 hours studying Tesla and doing unique research. And today I'm going to share my thoughts. Profits grew year over year by 17% at Tesla. Their cash position grew tremendously, basically $3 billion in growth, despite spending heavily on their compute, but also their plants. They're spending a lot with CapEx, but despite that cash going out the door, they're still bringing in excess cash. Their operations had $6.3 billion in cash increase, operating cash flow. So is very strong. Tesla shared that their AI training compute grew by 75% during the third quarter. I've been sharing that Tesla wasn't just going to turn on Cortex when they were finally able to get all 50,000 of their H100s online, that they would begin to use that training compute as it spun up. So they shared with us that they're already getting value from Cortex, which is their supercomputer at Giga Texas that they're using the crazy cooling system for. So that was exciting. Tesla reaffirmed some things. So there was a lot of stuff that wasn't really news. So just last quarter, Tesla said that in the first half of next year, 2025, that they would start producing their lower cost model, whether it's a compact hatchback or what. They reaffirmed that. People got anxious about that for some reason because they didn't talk about it at the We Robot event, but they reaffirmed that. So, yeah, I thought that was kind of a non-issue. They just really surprised on their cost cutting in the automotive business. On previous calls, Lars Moravi had said that they were shaving costs, and they also described like how hard it was to lower costs. And even on this call, Elon Musk said that it's more expensive to cut costs from like a Model 3 or Y to their less expensive car, that it costs more money to do that than to create the factory itself. So a lot of work is being done in research and development and design, all those things in order to bring the lower cost model to market. And I think this is going to be a tall order for legacy auto to be able to match. There's a lot of legacy auto that have come out and said, oh, we're going to do a $25,000 car. We're going to do a $25,000 car. Like they can just snap their fingers and do what Tesla does. And we don't think that's going to be the case, that they can make a $25,000 EV that's not like made in China, that's crash test worthy, all those good things. We saw an acceleration in margins in the energy business, going up over 5% to 30.5%. And this was in a quarter where the overall amount of business done on the energy side declined. So those margins increased. The CFO did warn about potentially weaker profits in the fourth quarter of this year and said it was due to product mix. And we already seen Tesla increase their sales incentives, offering a lower interest rate on Model Y for longer. So you can now get a 0% loan for 5 years on a Model Y. plus some other incentives like the gas savings, but also the referral bonus and all those good things, the federal credit. And like if you get an inventory vehicle that's already been made but not claimed, you can get 4,000 off, things like that. So these incentives may drag profits next quarter, but it was really encouraging to see how much Tesla was able to drop their costs. I got to think that other auto execs watching what Tesla is doing, seeing that they're profitable making EVs when no other car maker in the world is profitable making EVs, according to Elon Musk. Even BYD, they're likely losing money on full battery electric vehicles and making all their money on their hybrids. So Tesla is doing what no one else is achieving currently. Also on the call, what we heard was that Tesla has projections where they think the disengagements per mile is going to decline to the point where it's going to be on par with humans in Q2 of 2025. Elon reiterated that like every Tesla car is essentially a robotaxi. So the Cybercab is a robotaxi, but also the Model 3, Model Y, S, and X are a robotaxi. And Tesla already has, I'd say, approximately 2 to 3 million cars in the United States and North America that they could run as robotaxi. They shared with us that they're already running an app with employees where employees can ride in a robotaxi to work or whatnot. So they're testing out the app. These cars do have a safety driver. So there's a safety driver there. This is due to California law. Before you have the autonomous permit, you have to have a safety driver in California. So not technically don't have a driver, but it's encouraging that Tesla's already working on the app. They're aware that they need to figure out the app along the way. So that was some positive news as well. It was kind of a strange call though, in that like Elon was talking kind of how I tend to talk. I tend to be like robotic and kind of monotone at times. And he was talking about this amazing future that Tesla plans to have, that they're going to continue to grow their company into this amazing future. And is just very monotone. And it kind of reminded me of listening to Joe Buck. He's a sports announcer, and he's kind of notorious for these sports calls where there'll be something amazing that happens on the field. Like, let's say Troy Aikman got picked off by Deion Sanders or something like that. And it'd be like Troy Aikman gets picked off by Deion Sanders. And then like Deion Sanders skirting people to run it in for a pick six. And he doesn't get like super excited and animated. And he says he's excited, but you don't hear it in his voice. So that was where he was talking softly, but carrying a big stick on the call for me. Tesla also guided toward making and delivering over 500,000 cars in the fourth quarter, which is pretty notable because in all of 2020, Tesla delivered 499,550 cars. And they're going to do that in one quarter exiting 2024. So essentially, their run rate exiting 2024 is going to be 4x the run rate for all of 2020. A 4x in 4 years is pretty good. Elon talked about the auto business growing 20 to 30% as far as units next year. So they're pretty excited about the growth they're seeing there and the more fully utilizing their factory capacity. Wall Street was likely lower than 15% growth for where they had Tesla for next year. They also hinted that Megapack would do at least 9 gigawatt hours next quarter, where this past quarter they did 6.9. And the quarter before that, I think they did something like 9.4. So getting back close to 10 gigawatt hours a quarter Elon confirmed that Lathrop had at least 1 week where they made 200 megapacks in that week. So essentially surpassing 40 gigawatt hours. So I'm anxious to see if those margins that we're seeing in the energy business, if they continue to increase or if they fall back next quarter. If they continue to increase, Wall Street may be a bit shocked. And we're also seeing that the Megapack factory in China is going to want to start to get going early next year. So it was a big positive shock. A lot of people were forecasting lower profits for this quarter. So for Tesla to firm up their business was a big positive surprise. Also, going into this call, people were overly negative. I did a poll on X, and what I asked was, after earnings, do you expect the stock to go up, down, or not sure? The poll was extremely bearish going into the call. So Tesla really knocked the socks off of our expectations. So I was pleasantly surprised. I think a lot of bulls were pleasantly surprised. And I think there's a lot of bulls that have been playing around with other stocks. Maybe they had reduced exposure after Robotaxi event. And in my opinion, they're buying today. The stock is up 20% as of the time of recording. They're seeing this fundamental improvement. We're also seeing Wall Street upgrades, price targets because of the fundamental improvement. Yeah, I'm curious to see how early next year goes, because if Tesla redoes some models, that may mean that production might go down initially and profits might drop for a quarter before they re-ramp any models that they're redoing. And then any models that they add, they'll have to pay higher production costs as they begin those ramps and before they reach scale with those. So I'm curious to see how that plays out. Also curious how soon Giga Shanghai gets Megapacks going, or I should call it Megafactory Shanghai. And that's it for now. I'm Bradford Ferguson with Rebellionaire.com. Check out Matt's video where he talks about FSD take rate. And Matt is going to do another video, possibly with me, where we talk a little more about the earnings call. Anyhow, that's it for now. Bye for now. Take care.